This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on August 31st, heading into the long weekend. Our time is 8:37 Mountain, 10:37 Eastern. The radio show runs QR77 Calgary, 630 CHED Edmonton, AM 640 in Toronto. If you ever miss a radio show, they are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. The company Harold recommends you use when it comes to investing in precious metals is Worldwide Precious Metals. Connect with them, wwpmc.com, or call 1-866-623-2002. Should mention, our radio show is podcasted, and it's done through iTunes. Download iTunes free of charge, put it on your computer, sign up for the podcast. We are portable. You can take our radio show anywhere. As we start the program today, Ben Bernanke is speaking in Jackson Hole, Wyoming. This was the big speech everyone was waiting for. Mario Draghi, he's going to be speaking on the weekend regarding the EU. And we didn't get quantitative easing 3, which is not a big surprise. Bernanke said he would not rule out further bond purchases to boost growth and reduce unemployment, which he called a grave concern. Harold, I think it's not a surprise for us. There's incredible pressure on the Fed right now from a lot of different sources, auditing the Fed, people putting pressure on Ben Bernanke, political sources saying that if they actually did quantitative easing during this election period, that it would be favoring Barack Obama. If anything happens, I'm guessing it's probably after the election in the United States.
You know, that would make sense, but I'll tell you, things are so crazy in these markets right now, Randy, it's very difficult for them to figure out what to do. I mean, I don't think that there's ever been a financial situation as severe as what we're going to go through coming up over the next few years. So, again, I can certainly understand that they don't really know what to do, but, you know, in all honesty, when the market opened up this morning, Friday, gold was up $6-7, then all of a sudden it dropped, you know, $20 in a few minutes, and then it reversed and it's now up $10 on the day. So we're at $16.72 in gold. All in all, a very surprising week for gold and silver because it's a long weekend, and normally going into the long weekend, we'll see the traders sell the gold and silver market off. That's what they seem to do every time, but that is not happening at this point. As we're taping the show on Friday, gold's up $9.30. It's at $16.72.70. Silver's back over $31. It's at $31.32. Platinum's up $12 on the day at $15.31, and palladium's back over $600. It's at $6.31. So all in all, the metals markets this week did tremendous. In fact, I believe we're up every day in gold this week. Normally, they would have sold the market off going into a long weekend as a lot of the traders are gone, but the fact is that gold's holding very, very strong. Actually, the dollar is also dropping substantially. The dollar's down about a half a penny today. The U.S. dollar is down to 81.26. It wasn't that long ago that when everyone was talking negatively about gold, that the U.S. dollar was at 84 and change. We're now back down to 81.26. The U.S. dollar, in my opinion, is a currency that has to fall substantially. There's so many U.S. dollars out there, and they're printing so much money. The fact is that the U.S. dollar has to fall, and that's why we're such a strong component of the hard asset market. Gold, silver, and diamonds will react tremendously to a weak U.S. dollar, and that's going to be phenomenal for all of us. On top of that, the crude oil market has skyrocketed on Friday. It's up to $96 now. Now, the fact is that the oil market was on alert this week because of the hurricane heading into the Gulf of Mexico. It was only a Category 1 storm, but it did, close down the refineries, and that's why you saw oil basically holding in there very strong this week, wanting to see if it was going to, close down the refineries again. But all in all, I don't think there was that much damage. Normally, the oil market would have sold off heavily based on the fact that there wasn't an awful lot of damage from the hurricane, but the oil market's back up $1.37 today. We're trading at $96 in crude. I'm extremely bullish on gold, silver, and crude oil. I believe that those are the three commodity markets that are going to continue to make gigantic increases over the next 5 years. So that's what I recommend, owning physical gold and silver. I mean, to own it physically is extremely important. And the fact is that we're going to be in this gold market for at least another 5 years. It appears to me that the Federal Reserve, who doesn't really know what to do at this particular point, is going to keep interest rates low at zero. They're hoping that that's going to spur some type of growth. I just don't see it. You know, the fact is that in the United States, which is one of the areas in the world that's hurt the most financially because of gigantic debt, there's just no way in the world, as confusing as the situation is worldwide in the U.S. and in Europe, the fact is that if the middle class doesn't get back on track, if the housing industry doesn't move substantially to the upside, there's no chance that the U.S. economy can get back on track. Because if the middle class is not spending, buying TVs, buying cars, buying new homes, that type of thing, there's just no way that the economy is going to continue to move further. So even with quantitative easing 3, if they do come out with that, and it wouldn't shock me that they would, I think it'll have the same effect as the last two, which did basically absolutely nothing. So the government is between a rock and a hard place. There's just no way in the world that they can keep this economy growing. The fact is that unemployment is high, and it's going to get an awful lot worse. The earnings and the retail sales are all down. It just doesn't look very good at this particular point, and the danger in the market is probably the most substantial that we have ever seen. The fact is that most of us are not old enough to have remembered or gone through the Great Depression, but this could turn out to be even worse than that. So the fact is that my recommendations, and I've been in this business for 35 years, and I've gone through the inflationary times of the 70s and 80s. I've traded these markets from their lows to their highs, and basically what I'm seeing is that we need to be extremely conservative. Any type of speculation in these markets is a mistake, because the fact is the Federal Reserve and the actual governments don't know what to do. So the fact is that because they don't know what to do, they're doing things that just don't make an awful lot of sense, and they're so risky. That's why I'm urging everybody that has listened to the show for the last 10, 11 years just to remain extremely conservative. Own gold and silver. There's no doubt in my mind that gold and silver are going tremendously higher than where they are right now. In fact, they're one of the only assets that will move higher over the next 5 years. So the fact is that right now we're trading at $1,672, almost $1,700 gold. When we first started doing the show, gold was all the way down to $300. It's hit a high of $1,900. We believe that we'll take out the high of $1,900 gold this year, going into the last quarter of this year, which we're just entering, and I do believe we have a shot at $2,000 to $2,200. Also, the silver market, which is up 40 cents today so far, the silver market has a very good chance of getting back to $40 to $50. It took the bigger hit when the market fell from 50 down to 26, but it's now back up to 31. We've seen a $5 increase in the price of silver from the low, and I do believe that silver over the long run will continue to outperform gold. I believe when this whole thing is ending, silver will be in the triple digits, meaning it could be $100 to $200 metal. So basically being able to buy it at 30 and selling it at 100 to 200, if that does happen, the returns on gold and silver will be substantial. The reason that you want to own gold and silver is not only as an investment, but as a hedge against inflation. And basically everything that's happening in the world markets right now are pointing to massive inflation. The governments don't want to deal with inflation right now because, again, they just can't deal with inflation and have interest rates at zero. In order to deal with inflation, you must raise interest rates, and my feeling is before this whole thing is over, we're going to see interest rates back up at 15%, just like we saw back in 1980 when interest rates went up to 22% after the heavy inflationary bout. So there's going to be a lot of situations happening. It's extremely frustrating that you cannot make any returns on your money by putting it in the bank or putting it in stocks or real estate at this point. The areas that you really need to concentrate on, and again, I've been through these markets before and traded them while these types of scenarios have happened, high inflation type of thing. You want to own gold, silver, oil, and diamonds. Those are the four areas that will not only hedge you against inflation, which we need to do, because as inflation goes higher and higher, your cost of living goes higher and higher. If you don't have the proper investments that will increase in value as the cost of living is going up, you're going to find that your lifestyle is going to go backwards. You're going to have to cut out going out for dinners and those type of things and going to movies and on vacation, because inflation with high oil prices and high food prices will just eat up everything that you have. These are the most dangerous times that we have ever been through. The fact is that when there's this type of doubt in the market, when you've got countries in Europe that are on the verge of bankruptcy and you've got the U.S. owing $15 trillion and in the trouble that they're in, the fact is that as smaller investors, we're not the Warren Buffetts of the world. We just need to sit back and be very, very conservative. Own your gold and silver outright. That's extremely important. Own some diamonds. Back in 1979 and 80, when gold went to $850 and silver went to $50 and inflation went crazy, colored diamonds went up 500% in 2 years. These are the type of assets that will continue to grow and grow for you, and again, will hedge you against inflation. The oil market, right now, the oil market is looking very strong. We anticipate that if there's a war in the Middle East by the end of this summer going into the fall, we could see oil prices go to $200. If that does happen because of a war between Israel and the Middle East, we would like to sell our oil at that point, take our profits and sit back, because from my experience, the price of oil will come down once the news and everything is, as they always say, buy the rumor, sell the fact type of thing. If there is no war in Israel with Iran, I still believe that oil over the next 2 years will go to 150 to 190. There's a shortage of oil. And the fact is that the world is using a lot of oil, especially China at this point. So, the heavy inflationary markets, the gold market, the silver market, the diamond market, the oil market, are the four major areas where the money is going to make, and that's going to offset your other losses. The other thing that you should take into consideration is why, if your hard assets are moving up in value, why would you want to hold on to your paper assets that are going to drag down your investments? You don't want to make on one and lose on the other. The risk in the paper asset market, meaning the stock market at this point, is probably as high as it was in 2008 when the Dow Jones fell from 14,000 down to 6,500. At the end of this year, at the end of 2012, all of the President Bush tax cuts are going to end. This could send the stock market reeling down into a spiral that could bring the market down back to the levels that we saw in 2008. Why in the world do we want to take the risk when from 2008 all the way back up to 2012, after 4 years, you may possibly just be getting back to a break even, and now we're at an oversold position again where these tax cuts could set us over a fiscal cliff that could send these markets plummeting. I urge you to look at your financial situation, to look at the risky areas and eliminate those risky areas. There's no money to be made in stocks at this particular point. You don't invest in stocks when countries are going bankrupt. You sit back and you let the markets do their thing, and then we buy the market back when the time is right to do so. And the time will be right to do so when the metals have topped out and things are going to change around. And that's not going to happen for probably another 5 years. We've got a tremendous opportunity to improve our financial situation. If we're smart about this and we own the physical metals, the physical diamonds, if we invest in the right markets and eliminate the risky ones like stocks, you're going to find that we're going to get through these difficult times, and we're going to have the wherewithal, we're going to have the cash when we sell out of our hard assets to take advantage of undervalued assets like in the stock market and real estate market. So again, we're heading into very dangerous times. The Federal Reserve in the United States has no clue what to do at this time. If they do come out with quantitative easing 3, so be it. The stock market and the commodities markets will skyrocket in price, only because they're going to put in probably close to $1 trillion. By the way, as I was talking, gold is now up $12 on the day, and silver's up almost 50 cents. So all in all, we're in the right markets at the right time. Just be very conservative, keep a little bit of cash on hand, get out of your risky assets like stocks, sit on the sidelines there, and again, gold, silver, diamonds, and oil is where all the money is going to be made over the next 4 to 5 years.
Since 2001, hard assets, gold and silver, they have resumed their role as a store of wealth, protecting you against the decaying purchasing power of paper money. As events around the world financially and geopolitically change by the second, you need to have hard assets, gold, silver, diamonds, to profit and protect your wealth. Have that, as we said on past shows, financial firewall. that financial bomb shelter that you can protect your assets. Stop the destruction of your paper wealth by investing in hard assets, gold, silver, diamonds. Turn paper assets into hard assets for real wealth. Gold and silver have never gone to zero. You can't print gold, silver, and diamonds. Precious metals cannot be devalued or debased. It's never too early to fear the onslaught of inflation. A lot of smart people are positioning themselves right now. That is the silent killer of your money, the capital that you have. Speak with Worldwide Precious Metals. Harold recommends them. They've been in business for 10 years. They have 10th anniversary incentives. Go to their website, wwpmc.com, wwpmc.com, or call 1-866-623-2002. Educate yourself. They are the experts in this very specialized field as to why you should have your own precious metals investment account and why you need to do it today. Get our free weekly newsletter as well. It's the companion to our radio show. We spend many hours putting it together, and we send it out via email free of charge every week. You can go through it in a matter of 5 or 10 minutes, and you will be completely up to date on the finances of the world. And it's very important that you follow along not only with the radio show, but the newsletter. And if you want to delve further, you can spend hours going through the newsletter. This week in our newsletter, in the silver section, we have some great stories, some of the best stories we've had in quite some time. Eric Sprott, he was interviewed, and he gave a silver market update. He says, as always, I've been a believer that the gold-silver ratio will go back to its historic ratio, which is 16-1. If the gold price went to $3,200, that would imply the silver price would go to $200. A move from the recent lows of $26 to $200 is a hell of a lot better than the move from $1,600 to $3,200. That's why he's advocating having silver. And if you use the gold to silver ratio even on $2,000 gold, and we use a ratio of, let's say, 50-1, it puts us at $40 silver, 40-1, $50, 30-1, $66, 20-1, $100, 15-1, $133. And if you go to $2,500 gold, 50-1 would give us $50 silver, 40-1, $62.50, 30-1, $83, 20-1, $125, and 15-1, $166. You can see what Eric Sprott is talking about. Also, John Embry from Sprott Asset Management as well. He gave the silver market update this week. We have the most beautiful setup in the world here. The fundamentals for gold and silver could not be better. Yet the public is not even in those markets. They don't even care, so sentiment is negative. The bases that gold and silver have built will underwrite massive moves to the upside. Everything is now in place, and I think it's all going to come to boil this fall. I would add that I am wildly bullish on silver. I still believe it will take out the all-time high before the end of the year. Eventually, the public will enter these markets with a vengeance, and the masses will turn to silver because it trades at a 50-1 ratio to gold. That opens up the silver market to a lot more people. Gold may be the rich man's refuge, but silver will be the refuge for the rest of the world. So there will be an enormous gain in the price as the money flows into the already tight silver market. In a debt-logged world with a weakened economy, you're going to have massive money printing if you don't want a complete collapse. Gold and silver will be the go-to investment going forward as central bankers continue to destroy their currencies. Also, Egon von Greyers, who is out of Switzerland, where my mother is currently on holidays, having a good time, he gave a silver market update. If we look at silver, silver is going to move a lot faster than gold. The same technical target for silver is 150. That would move the gold-silver ratio, he believes, to 30-1. This is the type of move that is hard for investors to comprehend. But this will happen because we have had an energy buildup in these markets for almost a year. The release of this energy is going to unrelease a massive, massive move. It's going to unleash a huge move. This is not surprising because the destruction of paper wealth, paper money is continuing. Because money is printed, it's going to accelerate so much in the future. Paper currencies are going to reach their intrinsic value, which is zero. We are well underway into that becoming a reality. We're going to have a combination of short covering coupled with investment and speculation buying in both gold and silver. So the coming move is going to be spectacular. The ascent is going to be mind-boggling, but Yvonne Gongreyarts saying that we could see $150. John Embry saying in the short term we could get back to 50. Eric Sprott talking about $200 at one point. Harold, very, very bullish. We have about 2 minutes left here. Very, very bullish on silver at this point.
And we should be, because again, it's way undervalued. And the fact is that they're not taking into consideration the physical aspects of the market. So the fact is that the physical aspects of the market, so many investors are buying it. It's so short as far as supplies go, and the same in gold. There's just no way that we're not going to see those prices, in my opinion. So I'm a big buyer of silver, a big holder of silver. I have been for a long, long time. We've been buying it for 10, 11 years. I think it's one of the best investments you can make.
Speak with Worldwide Precious Metals. Connect with them. Their telephone number is 1-866-623-2002. The website, wwpmc.com, wwpmc.com. Speak with them about getting on our list for our free weekly newsletter. We send out via email free of charge, 1-866-623-2002. They can help you manage your precious metals investment account. You can trade the market if you want, buy and hold your metal. They're there to help you maximize profit, minimize the risk. They're the experts in this very specialized field. Stay away from people that have just sprung up recently, not recommended by Harold Siegel. Deal with Worldwide Precious Metals. And remember, this is a liquid asset you can buy and sell with a phone call. Every portfolio should have an allocation of precious metals at all times, good or bad. Connect with Worldwide, wwpmc.com, or call 1-866-623-2002. 1-866-623-2002. The Republican National Convention was on during the week in the United States. There was a lot of talk about the debt. In fact, they had a debt clock there. It will be interesting as the Democrats have their convention in the coming week after the long weekend, their rebuttal to exactly what was said. But John Malden, he put it quite well. The problem is the deficit. We hit the wall. I don't think most people really understand how catastrophic it would be to hit the wall. It's just something that we haven't seen in the United States. It's not in anybody's lifetime an experience, and it would be ugly. The truth of the matter is the United States is no different than Europe. And if they don't deal with their problems, they will end up like Greece or Spain or Portugal or Ireland or Italy. And that seems to be the direction they're heading. As Harold touched on, there's the fiscal cliff they have to deal with, the tax cuts that will be expiring, also all the pullback in spending that has been required. It's a fiscal cliff that they're going to have to deal with. It will be a rocky fall. Protect yourself. Have that financial firewall. Have precious metals in your portfolio. 1-866-623-2002 or wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Right after this. Right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. We're taping the show on August 31st, 2012. Our time is 9:03 Mountain, 11:03 Eastern. Radio show runs AM 640 in Toronto, 630 CHED Edmonton, QR 77 in Calgary. As we are taping our show right now, Ben Bernanke. He is currently speaking in Jackson Hole, Wyoming. And he said today that they have not ruled out further bond purchases to boost growth and reduce unemployment, which he called a grave concern. So it looks like we will have quantitative easing 3. That is a positive for hard assets. To invest in precious metals, the company Harold recommends you use Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. And in this part of the show, It's time to educate yourself and learn more about another hard asset that Harold brought to our attention 7 years ago in August of 2005. He wrote about investing in naturally fancy colored diamonds. He started the website rarecoloreddiamonds.com. It's the #1 website on the internet for investment diamonds, colored diamonds, rarecoloreddiamonds.com. The telephone number to connect with Harold, 1-800-432-1022, 1-800-432-1022. And we have our featured diamond of the week as usual. And it is an absolutely stunning diamond. This is a diamond that anyone would want to have in their portfolio. It's a 0.62 carat, round, brilliant cut, fancy purplish pink diamond. And the beautiful thing about Harold's website, you can see video of the diamonds. It does a 360. You get to take a look at the diamond from all different angles. We have pictures, we have videos. This is a diamond that is absolutely stunning, and you can speak with Harold Siegel about this stunning rare colored diamonds. rarecoloreddiamonds.com, or call Harold 1-800-432-1022. Harold, we were talking about creating a financial firewall bomb shelter. We know that the fiscal cliff has to be dealt with in the United States. It seems everything they do is kicking the can down the road. So you know that now is the time to investigate and learn from the best as to why people should have some diamonds in their portfolio.
Well, thank you very much, Randy. You're 100% true. It's a phenomenal investment, especially during these particular times. I mentioned it earlier in the show that one of the major reasons why we're making the investments that we're making right now is because we're so certain we're going to have massive inflation going forward with weak dollars and high oil prices and high food prices. In 1979 and 80, the last time we had very high inflation, that's when inflation went into the double digits. Gold went from basically $125 all the way up to $850. Silver went from $1.50 all the way up to $52. And colored diamonds went up 500% in 2 years. So those are your three hedges against inflation: gold, silver, and diamonds. Gold and silver trade on exchanges, diamonds don't. As far as diamonds go, and I'm talking colored diamonds, the very rare ones, they've never ever dropped in price. So it's a very safe asset. The other reason that you want to own diamonds is that in this crazy world that we're living in right now, with countries going bankrupt and currencies depreciating and really not knowing what decisions are going to be made for us that could hurt us financially, you need to take your own financial situation in your own hands. And you've got to evaluate what you want to do. If you're a conservative investor, which I personally am, and so are most of my clients, you need to own some diamonds put away. Number one, they will increase in value substantially during times of high inflation. There are certain diamonds, like yellow flawless diamonds, that have a track record. They double in price every 4 years. They go up by 25%. So those are diamonds and assets that you can put away for your retirement or for your future that you can depend on. I've been in business 35 years. I've seen everything in the markets. But during these particular times, we've been so extremely busy from clients all over the world, mostly in Europe at this point, so frightened about what's happening with their currency and their economy that they're putting their money away safely into diamonds. And the fact is that a diamond, a colored diamond, never depreciates in value ever. They increase by 25% a year. They double every 4 years in price, but during times of high inflation can go up 500%. So it's a perfect situation. The other thing about owning a rare colored diamond is that they're nature's art. They're the most beautiful asset that you could ever own. We've been very successful in putting these beautiful diamonds into rare forms of jewelry that only increase their value substantially. So again, with the high inflation that's coming, with the uncertainty in Europe and the United States, and everything going on at this point here, the smart thing is to put away an asset that nobody knows that you own. It's portable private wealth. You can put it in your pocket and go anywhere with it. It never depreciates in value. It does better during times of inflation than almost any asset does, and it's like real estate in your pocket. You could literally walk around with $20,000, $100,000, $1 million, or $5 million sitting in your pocket and nobody would know it. So the fact is that it's one of the most important assets you could ever own, and it's doing extremely well during these particular times. Now, diamonds, colored diamonds, can be very, very expensive. I mean, red diamonds, for example, are the rarest of all diamonds, and those diamonds start at $2 to $2.5 million a carat. Those are not necessarily the diamonds that most of my clients buy because they're way too expensive for most people. Phenomenal assets go up tremendously in value, but not everybody has $2 to $2.5 million to invest in a very rare diamond. From my experience, and in the 35 years that I've been in business, yellow flawless diamonds are still very reasonable. They start at about $15,000 a carat for a flawless yellow, and they go up from there. We actually carry diamonds starting at $15,000 and going all the way up to over $50 million. Most of our clients invest under $100,000 in diamonds, and basically for $15,000 or $20,000, you could own a yellow flawless diamond, GIA certified. So it's fully certified by the Gemological Institute of America. We ship the diamonds directly to you, so you own them outright. If you want to put them into a beautiful ring or necklace, we have the finest jewelers in the world that will make these pieces for you, make them into collector's pieces. So basically, we ship the diamonds directly to you. They can either go into your safety deposit box or wear them. They're absolutely stunning, and they go up in value tremendously. They go up by 25% a year, and there's very, very few assets nowadays that go up by 25% a year without taking a huge risk. There's no risk in buying a rare colored diamond. They never, ever decline in value, and the major reason for that is there's not been a new mine that has been discovered in the last 15 years that produce any of these diamonds. So basically, most of my clients that buy these type of diamonds buy them for their retirement. You can't trust the stock markets anymore. It's just way too speculative and risky. We all want to retire one day. If you were to put $20,000 into the stock market and $20,000 into a yellow flawless diamond, in 10 years your yellow flawless will be worth $100,000. God knows what your $20,000 in the stock market would be worth. So again, it really doesn't matter what the name of the investment is. It's what's going to give you the biggest return with the least amount of risk, and that's the rare colored diamond market. The other thing about the rare colored diamond market is how do you sell your diamonds? It's beautiful to own a diamond, but when you want to sell it, how do you sell it? And we realize that has been one of the issues with diamonds over the years, because if you invest in a diamond and then you want to sell it, where do you go to? Do you go back to the jeweler that you bought it from or the person that you bought it from? 99% of the time they won't resell that diamond for you. Or if the jeweler did want to buy back the diamond, they'd buy it back at a fraction of the cost. So why would a diamond be a great investment if you have no place to sell that? And that's what I've always realized in all the years that I've been in the diamond business. So we built H. Siegel Fine Auctions, the only live, online, real-time auction site for diamonds. And we built it for our clients. You, our listeners, our clients that own diamonds for investments, we are the company that you sell them through. And we only do well when you do well, because we get 10% of the profit only. So if you buy a $20,000 yellow flawless diamond, and in 10 years from now we sell that diamond for $100,000 and you make an $80,000 profit, we get 10% of the $80,000. We get $8,000 and you get all the rest. We're the only company that can resell your diamonds for you. So if you are investing in rare colored diamonds, be certain that you're going to be able to resell that diamond. We only resell our own clients' diamonds. We do not sell diamonds from other sources. So again, if you are going to invest in the rare colored diamond market, it's a very specific field. You really have to know what you're looking at. And basically, we own and cut 85% of the yellow flawless diamonds in the world. And most of those go to my Canadian clients. I'm Canadian myself, as most of you know, and my family. My young grandchildren all own these type of diamonds put away for their future. And believe me, when it comes to my grandchildren, I will only do safe investments for them. So at this particular point, we love the yellow flawless diamonds. We've got beautiful diamonds on our website. They're all videoed. These are all flawless yellow diamonds, and these are all diamonds that will increase by 25% a year and double every 4 years. The other diamonds that we want to recommend to you are Argyle pink diamonds. The featured diamond this week is an Argyle pink, one of the rarest diamonds that you could ever own, and the size of it is very, very large for a Argyle pink diamond. Most Argyle pinks are under a quarter carat. This one's a .62. it's more than 3 times that size. So you're looking at a phenomenal diamond. The other thing about the featured diamond is that it's round. That's the rarest cut for colored diamonds, and it can increase the value of that diamond substantially. So that featured diamond is not only a phenomenal argyle pink, a purplish pink. You can see the purple in it, but it's round, which makes the diamond extremely valuable, and it's an argyle. Now, argyle, what that basically means is that in Western Australia back in 1985, they discovered the Argyle mine in Western Australia. And this mine was the largest producing diamond mine in the world. It produces about 30 million carats of diamonds a year. But most of those diamonds are white diamonds or industrial diamonds. Out of this amazing 30 million carats of diamonds every year comes about 200 carats only of the world's most beautiful pink diamonds. And these pink diamonds are collector's items. They are phenomenal diamonds that increase in value tremendously by at least 25% a year, some of them even more than that. And when the mine closes down by 2018, which is less than 6 years from now, these diamonds will increase by 8 to 10 times what today's prices are. If you're one of the fortunate few to be able to own an Argyle pink, you've got an investment that in the next 7-8 years can increase 8 to 10 times your investment. If you buy a $50,000 Argyle pink, that diamond could be $400,000 to $500,000 in the next 10 years. And we want you to invest in that diamond, and we want to put it into a magnificent ring for you so you can enjoy it. And then we want to sell the diamond for you when the time is right to do so. As a client of ours, you get our newsletters each week, the World Financial Report, free of charge. Every month we put out our diamond newsletter with auction results and everything like that. You'll get that also. We send you auction results from not only my own company, H. Siegel Fine Auctions, but we also send you from Christie's and Sotheby's and other auction houses around the world so you can see how well rare colored diamonds are doing at auction. And then again, when the time comes to sell the diamond, we want to be able to sell that diamond for you on our... And by the way, we have clients all over the world. We're finding now that at our last few auctions, many of our clients from Europe, because of the financial situations there, are buying diamonds for safety because they don't know what's going to happen with the euro and their own governments. So basically, that's where the safe money goes. If you're a conservative investor, you don't want to take any risk, the appropriate investment for you could possibly be a rare colored diamond. Now, let me also specify that investing in rare colored diamonds is not for everybody. First of all, they're a longer term investment. You don't buy a rare colored diamond today and sell it a year from now, you won't make any money. You want to hold on to it for at least 4 to 5 years minimum to give it a chance to double. Number two, you know, the thing about the rare colored diamond market is that if you don't, when I say it's not for everybody, again, you don't put all of your money into one asset. So basically, if you only have $15,000 or $20,000 or $30,000 in the bank, you don't want to put it into all one asset. So again, the diamonds are fairly expensive. They start at $15,000, which again, not everybody has that type of money to put into investment. But I can assure you that if you invest in rare colored diamonds, it will turn out to be one of the better investments you've ever made, along with the safety factors of it. They never decline in value. They're portable private wealth. The Europeans call them real estate in your pocket, and they give you the potential for huge growth down the road. But again, you want to hold on to the Argyle pinks at least until the Argyle mine closes, which is going to be before 2018, which again is about 5 years from now. So if you can put this pink diamond away for the next 5 years, you're going to find that the returns could be substantial. A $50,000 diamond could turn out to be $400,000 to $500,000. It's done it in the past. I believe it's going to do it again. Now, these Argyle pinks are very, very, very difficult to get. We had an investor from Europe that came in and bought 90% of all of our inventory, which left us with very little. However, we have 80 new Argyle pinks coming up on our website. I've been promising this for the last couple of weeks, but they're very, very difficult to video. And the fact is that almost all of the videos are done. We only carry the fancy pink, fancy intense pink, fancy deep pink, and fancy vivid pink. Those are the 4 best colors that GIA grades. And I just want to let you know that all of our clients out there that were fortunate enough to own a vivid pink Argyle, those diamonds increased by 30 to 40% last year alone. They're nearly impossible to get. I've got 7 or 8 of them that were just cut and polished, just came out of GIA, and they will be up on the website by next week. those are the diamonds that go up ridiculously. Those are diamonds that are so rare and so difficult to get that, it basically boils down to anytime you buy the very, very best, you always get the most back for it. So, again, pay a lot of attention to rarecoloreddiamonds.com website. You're going to be able to see our new beautiful Argyle pinks, our gorgeous yellows. We've got some very exotic yellow flawless diamonds coming out over the next 2 weeks. These are the princess cuts, the rounds, the emerald cuts, the diamonds that most of the time you never ever get to see. So again, I'm extremely excited about what's happening in the rare color diamond market. The fact is that since we started advertising the returns on rare color diamonds, now you're starting to see all these shows pop up, which is so exciting. CNBC did a show on investing in diamonds, so did Bloomberg, all this week. So the bottom line is, this is one of the best investments you could make. It's a very safe investment. We want your business. I've been in business 35 years. Again, I know more about the diamond market than most. I eat, sleep, and drink this business. I get to play with these beautiful diamonds on a daily basis. And there's 7 or 8 different layers from in the diamond business, from the cutters or the miners all the way up to retail. When you deal with my company, almost all of those people are gone. We cut our own diamonds. My partner is a 4th-generation diamond cutter, and his whole family and grandfather and father have been in the business forever. We cut most of the flawless yellow diamonds, and the fact is that these are the diamonds that we recommend to you, and those are the diamonds that will go up the most in value. So again, go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, especially over the next week. Look at the Argyle pinks, look at the fancy yellow flawlesses, but on top of that, we carry the most beautiful green and blue and red and orange and purple diamonds that you could ever possibly imagine, and all of them are very rare and all of them great investments. All I can say is that we're going to head into the next 5 to 10 years are going to be the most difficult financial times that we have ever seen. The governments don't even know what to do. And as smaller investors, Canadians that have worked hard, that have had some success and put away some money, we want to be smart about where we put our money. We want to put them in areas that we're not going to lose it, but we're going to want to make some money on it. And with inflation coming and the rarity of these diamonds, these yellow flawlesses and Argyle pinks is where a lot of money is going to be made, and we certainly want our Canadian clients to be there. So again, go to rarecoloreddiamonds.com. Then in October, around the end of October, we will start up with 8 Seagull Fine auctions again. We've had 7 successful auctions earlier this year. In fact, we sold Oprah Winfrey's pink diamond necklace. So it's a phenomenal auction site, and we built it for our clients to resell not only their high-end diamonds, but also high-end collectibles like gold and silver coin sets, emeralds, rubies, and sapphires. It's one of the most exciting businesses we've ever had, and we built it for our listeners to the radio show.
Give Harold a chance to earn your business. If you've never considered investing in diamonds, educate yourself. He is the expert. RareColoredDiamonds.com. One way to connect with him, or call 1-800-432-1022, 1-800-432-1022, and ask him about the featured diamond. You can see it on his website, RareColoredDiamonds.com. We also have it in our newsletter. It is absolutely gorgeous. It's a 0.62 carat round, brilliant cut, fancy purplish pink diamond. See the video on the website, RareColoredDiamonds.com, under featured video. As we tape our show here today, breaking news, Ben Bernanke coming out saying QE3 is necessary. This is a story from MarketWatch. High unemployment is a tragedy, according to the Fed chairman. Ben Bernanke did not give any hints at the timing of the next Fed move. He made it clear that he's ready to pull the trigger. The only question that remains is whether it will happen in mid-September or December. In his speech to the Fed conference in Jackson Hole, Wyoming, Bernanke shot down every objection to further quantitative easing, which is known in the markets as QE3. The first 2 rounds of QE have been effective in supporting growth, and it has not led to any acceleration in inflation, he said. Bernanke said the evidence is clear that the benefits of QE outweigh the costs. Obviously, there are people that disagree, but Ben Bernanke, a MarketWatch story here, breaking QE3 is necessary. It's just a matter of the timing. That is a huge thing for the markets, gold and silver and diamonds. as people protect themselves as governments print and buy their own bonds. Connect with Harold Siegel. Learn about diamonds. RareColoredDiamonds.com, 1-800-432-1022. The company Harold recommends you use to invest in gold and silver, platinum and palladium. Speak with them about platinum. Platinum is very interesting right now. They'll talk to you more about it. 1-866-623-2002, 1-866-623-2002, the website wwpmc.com, the company Worldwide Precious Metals. One of the stories we have stayed on top of, and we have about 4 minutes left in our show here, Harold, is the budget deficit problem in the United States. The sovereign debt crisis continues in Europe, but the United States, their problem is just as serious. In fact, a chart we have in our newsletter, and I encourage you to get the newsletter from either Worldwide or Herald. Obama's budget will add $4.4 trillion in debt to the U.S. deficit in the next 4 years. Actually, it's not deficit, but debt. The deficit creates the debt. And over the next 4 years, on track to have $20 trillion in debt in 2016. You're talking $20 trillion. The United States would be in debt. U.S. states, their debt tops $4 trillion. They have 50 government states that owe $4.19 trillion. As well, student loans in the United States, the debt there is close to $1 trillion. It's at $914 billion in the second quarter of this year. And Jack Mintz, who's a Canadian, this is a must-read article from the National Post. The U.S., according to him, the U.S. is worse than Europe. At a European conference on the sovereign debt crisis that I attended this week, my overwhelming conclusion after listening to many experts, according to Jack Mintz, is that the United States is in far more trouble than Europe. This was brought home by calculations presented by Larry Kotnikloff, and we've spoken about him before, of Boston University, at a lecture he held at the International Institute of Public Finance, the biggest gathering of public finance experts in the world. Greece may be bankrupt, but the United States looks like a giant Ponzi scheme. You can read that article in our newsletter, Herald. With about 3 minutes left, if the United States is a giant Ponzi scheme, you need to create your own financial firewall at this point. Have your hard assets to protect you.
You bet, Randy. It's a very, very frightening situation to think that that's actually happening to the United States, but it is. I'm a Canadian living here, and I see it happening every day, and it's frightening to see that this is actually happening. Looks to me like the markets are rallying very strong. We're up $20 in gold. We had a huge turnaround today. Silver's up 70 cents. Oil's up $1.70. The U.S. dollar's down 50 points. All in all, the markets are looking phenomenal at this point. And again, it appears that while Bernanke is still talking, it looks like they may come out with QE3, which will rally the metals market and even rally the stock market on the short term.
Harold, have yourself a fantastic long weekend, and obviously I know you'll probably be doing maybe a little fishing, a little walking, a little bear wrestling perhaps.
Right. Well, thank you very much. I wish everybody a wonderful long weekend here in the States and in Canada. We wish you a long weekend, a wonderful one, and a very profitable day.
Now's the time to educate yourself. Learn more from the experts, whether it be on the diamond side, with Harold, the expert on diamonds, RareColoredDiamonds.com, RareColoredDiamonds.com. You can connect with him at 1-800-432-1022. Speak with him about the featured diamond this week. Keep up to date on all the diamond news via the monthly diamond newsletter. Get your name on the list for our weekly newsletter. You can get it from Harold at RareColoredDiamonds.com. or Worldwide Precious Metals, their website, wwpmc.com. The telephone number to connect with them about starting your own precious metals investment account today, 1-866-623-2002, 1-866-623-2002. Now is the time, as we're hearing today from Ben Bernanke speaking at Jackson Hole, Wyoming, to the Fed. More quantitative easing is coming at some point. Whether it be after the election cycle or maybe in mid-September, you want to position yourself now to take advantage of quantitative easing. Also, protect yourself from the financial catastrophe of the problems in the United States, that fiscal cliff. Create a financial firewall. Speak with Worldwide. Speak with RareColoredDiamonds.com today. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. Have a great long weekend. We will talk to you next week.